Very good morning. Good morning to the Honorable Ministers, His Excellency Ambassador from India, distinguished policymakers, industry leaders, and fellow ecosystem builders. It's a privilege to be here and an honor to participate in Indonesia's Economic Forum at such a momentous occasion. With Indonesia Open Network, Indonesia is not just launching another digital initiative, it's a foundational step towards building a shared digital infrastructure that can shape how markets evolve, how inclusion is achieved at national scale, and how competition can be sustained. We bring experiences from India. Over the past decade, we had the opportunity to build and deploy population-scale digital infrastructure at unprecedented speed. What traditionally takes multiple years was able to be institutionalized in a very short period of time. The acceleration was not accidental. It was the result of deliberate choices around architecture, around governance, and around public and private collaboration. At the heart of it was the interoperable DPI layers that standardize access and ensure neutrality. On top of the DPI rails, we have applications, we have business models and services competing freely. This structure has allowed us scale and scalability at the base while preserving competition and creativity at the edges. One of the most ambitious expressions of this approach in India has been ONDC, the Open Network for Digital Commerce. I'm happy to share that we as an organization had the privilege of contributing to the development of the core digital rails, and therefore would like to share ONDC journey not as a model to be replicated, but as a set of lived learnings, what worked, what proved harder than anticipated, and what we would consciously design differently if we were starting all over again. These learnings may be useful as Indonesia shapes ION in a way that reflects its own economy, geography, and priorities. Taking a quick sharing from India's journey, by 2020, India was one of the fastest growing digital economies in the world. Smartphone adoption was widespread. Digital payments were scaling rapidly. E-commerce growth exceeded 25% annually. Yet beneath this growth was a structural imbalance. India has more than 60 million micro, small, and medium enterprises. While they contribute significantly to employment and GDP, most were not participating meaningfully in digital commerce. Online demand was concentrated on a handful of platforms. Discoverability was controlled, sellers faced high commissions, data and consumer relationships were largely locked in. While digital commerce was expanding, economic participation was not expanding evenly. We faced similar structural challenges earlier in payments, but payments were fragmented until UPI created open interoperable rails. This experience prompted a simple but important question. If identity can be open, payments can be open, why not digital commerce? We see very similarities with Indonesia's ecosystem. It is already one of Southeast Asia's most vibrant digital commerce markets, driven not only by consumption, but by millions of entrepreneurs building livelihood through commerce. Indonesia has already demonstrated how national-scale interoperability can work through shared rails like QR-based payments. Therefore, the strategic question is, as digital commerce grows, will the value and bargaining power also decentralize? ONDC emerged from this challenge, and from the outset, it was designed not as a marketplace, but as an infrastructure. The intent was not to create another destination app, but to create a common language for commerce, a set of open protocols that allow buyers, sellers, logistic providers, and payment systems to discover and transact seamlessly. The design choices were very clear. In a closed-loop platform, a single entity controls the end-to-end consumer experience. Here we were looking at a decoupled ecosystem where people could plug in and no single player can capture the market by controlling access. ONDC was built on the belief that while there was a complexity in unbundling, the benefits of competition, resilience, and inclusion would structurally provide long-term benefits. I would like to share some of the learnings which became very clear. Firstly, adoption needs frictionless onboarding and visible ecosystem momentum. Technology alone does not create a network. Adoption does. Adoption only happens when onboarding is simple, standardized, and low cost, so that every seller, logistics partner, and buyer app can plug in fast. But even that isn't enough. An open network has no single brand, no single front door, so awareness doesn't build automatically. One of the strongest acceleration is early participation by large, credible ecosystem players who amplify reach. Second is that trust is the real currency in this case because we are working in an open ecosystem. Users don't trust protocols. Important learning is they trust outcomes, accurate catalogs, predictable delivery, reliable refunds. So in India, we learned you must build a trust layer from day one. Quality scoring, grievance redressal, dispute mechanism, and service level commitments. Thirdly, incentives are not a weakness but are a strategy. Every open network needs early catalytic momentum. Temporary incentives help break the chicken and egg problem, but they must be designed as a bridge and not as a permanent crutch. Fourth, logistics is not a supporting function, it is the backbone. Retail networks collapse if logistics don't scale. If you want the network to work at national scale, treat logistics as standards. Fifth, keep the network open, but keep the standards very strict. Open doesn't mean uncontrolled. The network must remain open for innovation, strict on compliance to protect consumers, and create a level playing field. And finally, and most important, government stewardship plays a vital role. In open commerce, there is no single platform operator to arbitrate disputes or enforce standards. ONDC highlighted the importance of a neutral government-backed stewardshipness and ombudsman to resolve systemic issues, maintain trust, ensure that the rules of the network remain fair and transparent. Together, these are lessons of execution that can only emerge at scale. Today, while ONDC has processed hundreds of millions of transactions across mobility, retail, groceries, and services, it is critical that we look at what takes it forward. Indonesia is uniquely positioned to build on these learnings. The MSMEs contribute nearly 60% to the GDP, and the geography makes logistics interoperability essential. ION can become a powerful catalyst for growth. I would also like to encourage a broader lens. Open networks should not be viewed only through the prism of commerce. The same interoperable protocols can be extended to jobs and gig work, enabling portable worker identities and fair discovery. They can support financial inclusion by allowing credit, insurance, savings products to plug into the transaction histories with consent. Over time, ION has the potential to become part of a broader economic fabric, allowing Indonesians to participate across markets and without being locked into any single intermediary. Indonesia has the vision, ION has the opportunity. If India's experience offers any important lesson, it is this, that trust and true success of open networks is not measured by one winner, but by millions of empowered participants. Thank you very much.
Thank you very much.